afternoon, students. Welcome to Accounting 1303, Introduction to Accounting 1. My name is Mrs. Mercado, and this is the second part of the lecture for Chapter 6, which deals with financial statements and the closing process. Now, in the first lecture, I went ahead and I explained a lot of the information, and I did a comprehensive problem. Okay, now what I'm going to do in this particular lecture is go over once again the financial statements. And the reason I am drilling on this is because we need to know how to prepare an income statement, a statement of owner's equity, and a balance sheet. So I'm not going to spend as much time explaining it as I did in the prior lecture, but I am going to go over the logistics of how to complete each of these problems. That way you can be very familiar, because you are going to have this on your test number 2. Okay, on test number 2, a main focus of test number 2 is going to be preparing your financial statements. Okay, so let's jump into exercise 6.1. And let me set it up real quick here. We're going to need 3 columns. So it's very important that because we are using a software, we don't have to set up the headings, but just know that if you're preparing these financial statements on Excel, because a lot of the smaller companies or smaller businesses use Excel or things of that nature, you are going to have to set up the titles. I'm just going to do that real quick. I should have done that before, but I'll just do that. It won't take me a second here. Okay, so the first financial statement that we are going to be preparing is going to be the income statement. Okay, and it has to be prepared in that specific order. Okay, sometimes students want to do the balance sheet first. No, you have to do the income statement. After you do the income statement, you do the statement of owner's equity. After you do the statement of owner's equity, then at last you do the balance sheet. Okay, so it says from the partial worksheet for major advising below, prepare an income statement. Okay, so they've given you a worksheet. They've given you the information that goes into your income statement, and they've done all the work for you guys. They've told you this is what goes on my income statement. Okay, let me just choose a color here. So they do everything for you. This is what goes on your income statement. That is what we're preparing right now. So by now we should know that on your income statement you have 2 things. You have your revenues and you have your expenses. Okay, so what we need to do, the worksheet has already separated the information, what goes on the income statement, what goes on the balance sheet. Since we are preparing the income statement first, we're going to focus on these 2 columns right here. Okay, and like I said, we always start off with your revenues. Okay, so we're going to look at the information and we're going to identify our revenues. Now you can easily identify your revenues because they have a credit balance. Okay, all revenue accounts have a credit balance. So in this particular case, we only have one revenue account, which is your advising fees. Okay, we have one revenue account, which is advising fees. Because we only have one account, we're going to take that number to the second column, which is your totals column, and that is 4140. Okay, and I'm just going to put some commas here. That way it makes it easier for me to see. Okay, now the second thing we bring in are our expenses. Okay, now we have a whole bunch of expenses provided to us here. All of these are our expenses. Expenses have a normal balance of a debit. Okay, so all of these are my expenses. So I'm just going to bring them in that particular order that they have them on the worksheet. Okay, so I've got wages expense of 700. I've got advertising expense of $90. I've got rent expense of $500. I've got supplies expense of how much? Of $150. I've got phone expense of $67. Okay, what else do I have? I have electricity expense. My electricity is $48. I've got insurance expense, and I've got $89 there. I've got gas and oil expense, and I've got $53 there. I've got depreciation expense, and this is for my office equipment, for $200. And last but not least, I've got my miscellaneous expense, okay, of $23, okay? So now, those are all of my expenses, and usually you can identify your expenses because they have the word expense on the end. So you bring in all of your expense accounts to the first column because you have to add those to get your total expenses, okay? And then you get your total expenses and you're going to add them all together. So I'm just going to do the sum of all of those. And that gives me $1,920. Okay, so you made $4,140. You spend $1,920. So remember, if your revenues are greater than your expenses, then you've got net income. If your expenses are greater than your revenue, then you've got a net loss. In this particular case, my revenues are greater than my expenses, so I have net income. And I'm going to get my total revenues minus my total expenses. And that is going to give me a net income of $2,220. Okay. So that is going to be my net income right there. I'm going to highlight that for you. That way you can see that is your net income. Okay. So that is it for my income statement. Very easy. Revenues minus expenses. And you are looking at the income statement column. Okay, so we've already used up all of the information on my income statement section. Okay, now we are done with the income statement. Now we can move on to, and I'm just going to copy the formatting, guys. That way I don't have to redo all of this. Now we're going to do the next financial statement, which is your statement of owner's equity. Now that's what they're wanting us to do. Okay. So now we're doing our statement of owner's equity using the same information. Okay, so we've already used all of the income statement information. We can ignore that. Now we have to look at what goes on the balance sheet. Okay, now the columns on the balance sheet are going to be used for your owner's equity financial statement and your balance sheet. Okay, so there's two things that you pick up from your balance sheet columns when you're doing your statement of owner's equity. You bring in the capital and you bring in the drawing. Okay, those are two things that you bring in when you are preparing your statement of owner's equity. Okay, those two things go in your statement of owner's equity, your capital and your drawing. Okay, so you always start off with your last month's ending capital. Okay, so this is called Ed Major capital, and the capital we had was $4,100. Okay, I'm going to bring that to the second column because that is my total. We only have one capital account. Okay, now this is where we have to be very careful. The next thing that we bring in is your net income or your net loss. Okay, now that number comes from your net income statement. Okay, whatever you calculate on your income statement, this number is going to go into your statement of owner's equity. Okay, so whatever you get here, that's going to go into your statement of owner's equity financial statement. So my net income is $2,220. Okay, and that is also given to you in your right here in your balance sheet, in your worksheet. Okay, that is calculated for you there. Okay, so you're gonna bring in your net income, and we had net income of 2,220. Okay, and you either get it from your worksheet right here or from what you calculated. Regardless, it has to be the same number, 2,220. Okay, so after that, we have to look and see if there was any withdrawals done by any of the owners. Okay, and we do have one withdrawal by Ed Major for $900. He took money out of the business. So we're going to have Ed Major drawing, and Ed withdrew $900. Okay, now we need to figure out either an increase or decrease in capital. Okay, so we are going to get your net income, and you're going to subtract your withdrawal. So you generated $2,220 during the month, and then the owner took out $900. So how much did your capital increase by? So it's the net income minus the drawing. That gives you an increase, and it's an increase because it's a positive number. It's an increase in capital of 1,320. Okay. Now that we've got that calculated, we can calculate our ending capital for the month of January. Okay. So to get our ending capital, and I misspelled major, guys. Here we go. Okay, so to calculate our ending capital, we're going to get our beginning capital plus our increase in capital and add them together. Okay, if this were a negative, then you would have subtracted. If it's a positive, you add it to your capital. Okay, so my ending capital is 5,420. Okay, and I'm going to format Painter there. Okay, so my ending capital is 5,420. Okay, so that is how we prepare our statement of owner's equity. Okay, it's your beginning capital. You add your net income. If you have a net loss, you subtract it. You subtract your withdrawals. You calculate your either increase or decrease in capital, and then you calculate your ending capital balance for that month. Okay. Now the last financial statement that we have is your balance sheet. Okay, your balance sheet. So let me copy the formatting. Okay. Well, okay. I don't think it needs to be that big. Here we go. And then I'm just going to copy this. Well, I'm just that because the rest I need to enter it. So in this particular case, they're asking us to prepare the balance sheet using the same information. Okay, balance sheet. Now the balance sheet is as of a point in time. So this is as of January the 31st. Okay, or whatever the year is. Okay, so here we go. Now on the balance sheet, we're going to include everything else that has not been included so far. Okay, we're going to include our assets and we're going to include our liabilities. Assets and liabilities. That is what's going to get included on your balance sheet. Okay, you're going to obtain your assets, which are all of the debit balances, and your liabilities are your credit balances. Okay. So we're going to start off with an asset. Now when we're doing the balance sheet, we're going to have to segregate between current assets and long-term assets. Okay, so we're going to start off with my current assets. These are any assets that you can either use up or convert to cash within a year. Okay, so the first one we have is cash. Cash is already money. You can already use it. My cash is $13.39. Let me put commas here. That way I can see clear. There we go. Okay. The next thing we have is accounts receivable. Okay. Your accounts receivable should be collected within 30, 60 days. Okay. So that is going to be converted to cash in less than a year. Okay. Then we have supplies, and supplies are usually used up within a year. We don't buy supplies for 10 years. We buy supplies for a year, for 3 months, for 4 months, half a month, 6 months. But we usually don't buy too much supplies because then either, we have the risk of getting lost or they're just sitting in our warehouse. So we just buy what we need. So that's going to be consumed during a year, and we have $346 of supplies. Then we have prepaid insurance. Okay. Most companies prepay their insurance either in a 6-month policy or in a year. Okay. We never go over a year. Okay. So the prepaid is gonna be used up within a year, and my prepaid insurance is $800. Okay. Now, the last asset we have is office equipment, $3,500. Okay. Now you need to ask yourself, is that office equipment going to last me a year or more than a year? And most of the times the answer to that question is going to be office equipment usually lasts longer than a year. So that is not going to go into this category. That's going to go into the next category. Okay. So for purposes of this worksheet, these are all of the current assets that I have. So now I'm going to get my total current assets. I'm going to add all those 4 accounts together and let's see what we get. Okay. You add them, and they give me 3,420. Okay. We still have one more asset, which is my office equipment. Okay. Office equipment goes under property, plant, and equipment. PPE, property, plant, and equipment. Any asset that's going to last you longer than a year goes under property, plant, and equipment. And in this case, we have office equipment. Okay. And we have office equipment of, let me see, where is my office equipment? Right here, $3,500. Okay, there we go. Okay, so my office equipment is $3,500. Okay, now right below office equipment we have a contra asset account called accumulated depreciation. This account keeps track of how much we've used up our equipment for. That is what has been depreciated. So whenever we have property, plant, and equipment, we're going to have the corresponding accumulated depreciation account right below it. So we're going to have less accumulated depreciation for the office equipment. Okay, and that is $200. So now I can calculate my total PPE. I'm going to abbreviate. My total property, plant, and equipment is going to be the 3,500 minus the 200. So my property, plant, and equipment is $3,300. So now I can get my total assets. That is going to be the total of your current assets plus the total of your property, plant, and equipment. And that's going to give you $6,720. Okay. So that is my total assets. Okay. And now we need to label it. I forgot to label it up here. Let me insert a column. These are my assets. Okay. Now the second category I have on my balance sheet are my liabilities. Okay. Liabilities are anything that you owe. Okay. So liabilities are anything that has the word payable on it. Okay. We have 2 liabilities. We have accounts payable and we have wages payable. Now both of these accounts are current liabilities. A current liability is anything that you're going to pay within a year. Current liability. Okay. So we have current liabilities. Anything that we're going to pay within a year, and we have 2 accounts. We have accounts payable of 1,000, and we have wages payable of 300. Okay. Now, if we had long-term liabilities are anything that we owe over a year. This is usually a mortgage payable. Mortgages are usually long-term. And notes payable, those are usually your long-term liabilities. In this case, we don't have any. We just have accounts payable and wages payable, and both of these will usually get paid in less than a year. So now I can get my total current liabilities. Okay, so we're going to add liabilities. Okay, we're going to add those two together. And let's see what we get. So my total liabilities are $1,300. Okay. Okay, the last section we have is our owner's equity section. Okay. On my owner's equity section, I am going to bring in my capital. Okay. Now this is where you have to be very careful. You are not going to bring in the capital from your worksheet. You're going to bring in your capital from your statement of owner's equity. Okay. So your statement of owner's equity, whatever you get on your ending capital, that is going to be transferred to the balance sheet. Okay. So if you get this number wrong, then you're going to get your balance sheet wrong. Okay. So that 5,420, that number is what we're going to plug in on our owner's equity section. So we're going to do Ed Major. Capital. And my capital is, remember, we're going to get it from our statement of owner's equity, 5,420. Okay. Okay. And we only have one capital account, so I'm going to bring that to the end so I can get my total. Okay. Now that I have that, I can get my total liabilities and owner's equity. Okay. So to do that, I'm going to add my total current liabilities of $1,300 plus my total equity of $5,420. And that's going to give me $6,720. Okay. Your total assets need to equal your total liabilities and owner's equity. So both of them are 6,720. The balance sheet is intended to make sure that you are in balance. Okay. If your total assets do not equal your total liabilities and owner's equity, you made a mistake somewhere. You have to go back and fix it. Okay. So it's very important that when you're doing your balance sheet, your total assets equals your total liabilities and owner's equity. Okay. So that is the balance sheet. That is the third financial statement. Okay. You are going to have this on your test. You need to know how to prepare an income statement. Remember, the net income calculated on your income statement is going to flow over into your statement of owner's equity. Okay. You complete your statement of owner's equity, and your ending capital is going to be used for when you prepare your balance sheet. You're going to enter it under the owner's equity section. On your balance sheet, your total assets need to equal your total liabilities and owner's equity. Okay, so these are the three financial statements prepared using the same worksheet. Okay, it's just a matter of knowing what goes where. And the worksheet already tells you, okay, this information right here, these two columns go into the income statement, which we used, revenues minus expenses. On your statement of owner's equity, there's only two things that go in there, which is your capital and your drawing. Okay. And then on your balance sheet is everything else that you didn't use, which is your assets and your liabilities. Okay. So these are the three financial statements I wanted to go over with you. That way you could have better practice for when you get have your test, because this is going to be heavily covered on your test. If while you're working your assignments you have any questions, please do not hesitate to reach out to me. I am here to help you as much as I can. I wish you the best of luck, and please make sure that you complete all of your assignments. That way you can have access to the solutions and the feedback in Cengage after the assignments close. If you don't attempt a specific assignment or problem, you're not going to have feedback to go back and review. Okay, so it's very important not only to earn points, but to practice the content in the chapter That is why I give homework. I don't give homework to keep you busy. Okay, I don't. That's not my intent. My intent is I give you homework so you can practice what you're going to be doing one day in the workforce. Okay, if you're running your own business, if you're working for someone else, you need to learn how to prepare financial statements or doing whatever it is that we're doing. That is why I give you homework so you can get to practice and apply what we're learning to actual scenarios. Okay, so that's it. Until next time, have a great day.